Welcome into the live stream today. We're going to be jumping into, of course, discussing the recession, the kind of impact this will have on Bitcoin, the crypto markets in general. We'll dive into all that good stuff. Thanks again for sticking around since our last show here, guys. We're busy in the studio today, so we're going to dive into all of this good stuff. My name is Paul Barron. Welcome back into TechPath. As you guys know, we will do a couple of live streams a day here. So what we're trying to do is stay up with around 1:30. Typically, we'll hit maybe on this set or the metaverse set. If you get a chance, catch our piece we just did on Meta and what that could mean for metaverse. A lot of things happening in that space. But when you look at the overall market, obviously yesterday, the Fed meeting, FOMC, we started to see a little bit of the Rembrandt being painted by the Fed. I'll call it a Rembrandt because I hate that artist. But the point being is that now we have GDP numbers out. You go to the CNBC article, GDP fell 0.9% in the second quarter, second straight decline, and of course a strong recession signal. Everybody, of course, has seen this coming for months on end, all the way back to pre-first or second quarter. So we've talked about this on this channel for quite some time. And if you look at just the overall performance as a whole, the market we've seen, even though real estate has not necessarily been the leader, obviously it is a lagging indicator. Usually employment, credit markets, those are some of the things I really watch closely because I think those are the ones that have a lot more impact on how the market will play out in the short term and then moving into what will be a recession. But this shows you the quarterly change in U.S. Gross domestic product. Obviously this was back here during Cerveza, and then of course you had our first and second quarter right here with a nice Q4. This was really kind of what put us in a recession, was the end of last year and the printing of money and distribution of money in 2021 Q2. So there was a lot of precursor to what was leading up. What's still surprising to me is that the Fed did not start the tightening much earlier than what we saw with it happening this year. Obviously that has had some impact on what, of course, is rolling out right now. So interesting things for sure. If you look at a couple of tweets, here's just kind of the message and the narrative that's been pushed out by DC, US GDP falling by 0.9% in Q2 negative, but remember it's not a recession. This whole aspect of them changing the name is kind of interesting. Here was Gareth's tweet. GDP comes out, yes, markets initially sell, then rally as investors love the falling dollar, which is a problem and is a good thing because remember, dollar go down, Bitcoin go up, and likelihood that the Federal Reserve can no longer raise rates. If they see a falling dollar, he is right. Federal Reserve will most likely back off of that. So the risk on for now until the market realizes the Fed cannot print us out of a bad recession. So I am in agreement with Gareth in terms of we have not really seen the bad parts yet. I know a lot of people think, Jesus, this is really bad. We've got the market down in double digits. We've got crypto falling off 60, 70%. These are bad times. We've got obviously ridiculous price increases around the US and globally. But the reality is that we have yet to see a full pullout. Remember the lagging indicators, and if you watched the FOMC with us yesterday, there was a few things in there that he really talked about that I think are the big canaries in the coal mine that need to be paid attention to. Obviously, labor will be a big part of it. Housing will be another part of it. And being able to correct out of those two major areas. Because getting jobs back and getting the housing market under control are two of the hardest things to do in a recession. And usually those are done and dealt with deep into a recession. I'll show you some charts on that as well. Here, of course, is from Brit Hume. Worth noting, there's a reason why 2 down GDP quarters has long been a standard definition of a recession. This was basically out of the 10 times in the U.S. economy has experienced 2 consecutive quarters. Let's just look at this of negative economic growth. How many times was a recession officially declared? Well, that's called 10 for 10. So yes, that would be the case. Total agreement. It's what we've been kind of indicating for quite some time. Here's Macro Alf telling us that they know the growth is slowing, still doing 75. This is interesting to me because I still believe that the pressure is on. I know a lot of people are looking at yesterday's response as more dovish, and I would agree that the market responded to a more dovish position. But as you guys know, I'm a little bit of a hawk in terms of conservative positions, and I still feel that there's a lot more pressure on them by the Fed than maybe even what was alluded to yesterday. So it says a lot about what they really care about. Obviously, being inflation is the core thing. They just got to get this under control. And if you look at just at the Fed watch, this is something you guys can go to and check it out. But if you look at the next few meetings here, obviously was September is the potential here. This would be about 275 to 300 basis points over the course of this cycle, is right now 74%. So you're talking about another maybe 75 basis points to 50 basis points. You can kind of see the point here all the way down to a quarter. You kind of take a look at November, still maybe another quarter basis points, 325 to 50. That one's at 26%. And then go all the way into December. It's a little bit undetermined yet what the Fed might do. So in terms of basis points, again, interest rates are a big factor here on how the economy responds. But the reality is that, remember, pricing and price stability, is what they're calling this, is probably one of the most concerning scenarios, because that is the big factor that affects more Americans and more global citizens, is how price stable are the markets in general. And what I mean by that is just everyday consumer goods and services. So all that plays into it, because all of this will play into the markets and how the markets respond. Why the Fed's latest rate hike sent stocks soaring? This is a couple of cool little points that they bring up here. Obviously, the Dow was up 1.4%. This marked the Nasdaq's biggest rally since November. It had rose, the Dow was up 1.4 and S&P was up 2.6. And then you've got some other statements here. He noted, and this is some of the points that they drew out of the meeting yesterday. He noted that it's likely appropriate to slow the rate increase at some point, some point. Importantly, the rising uncertainty in the economic outlook has pushed the Fed away from explicit forward guidance to data dependence. So simply meaning that they're going to step back, look at the data as it comes in. They'll have 2 CPI prints before the next meeting, FOMC meeting. They'll have a lot more economic data to look at. And if we do continue to see pressure, the likelihood is we would see maybe another 75 come at us in September. So that would be hard for the market. If we saw a 50 come in, that would be interesting, even though right now I think the 50 is what is priced in. From the standpoint of a congressional mandate, this is what the Fed is trying to do to promote maximum employment and price stability. The current picture is plain to see. The labor market is extremely tight and inflation is too high. This is obviously what Powell said yesterday in the press conference. And here's the scenario, is that with the labor market being so tight at this juncture, the likelihood of being able to see that supply and demand continue to play out where there still is slow supply, because I think supply is getting ready to increase because demand is going to start shrinking, and that means more people will be out of work, hence more supply. When we start to see that, that is where I think the pressure really comes onto the Fed, because that's exactly what they're trying to do, is to keep that labor market and the overall price stability in check for traditional inflation. So definitely would agree that that is the direction they're trying to do it. Whether or not they are achieving it is still, I think, yet to be determined. If you look back at the history of inflations and their impact on how recessions roll in, let's go back all the way to 1980. Then we'll go forward and take a look at each one of these, because everybody's asking how long will this recession last, even though they haven't called it a recession yet. But how long will this price stability period of time last? Here was the 1980 recession. So this was obviously the Iran and Volcker recession. This was part one. Remember, this was a double dip, okay? So the first was 6 months. Then we went into 1982 into 16 months of a recession. So essentially right there, you had 22 months, one of the longest in recent history. Then you had the Gulf War in 1990, which lasted 8 months, so a fairly fast turnaround there. Notice the peak unemployment at 6.8%. The GDP decline was 1.5. Let me go back there. Here is the peak unemployment at double digit, 10.8 in the double dip of 1980s. Then you had the dot bomb. That was only a 5.5% unemployment. So again, that one lasted 8 months. Then you had the Great Recession of '08. This was essentially a housing crisis. This one was very concerning because I think unemployment rates, this is where we started to see manipulation of numbers in really around 2008 because of this. And you had GDP decline of 4.3%, and this lasted 18 months to get it corrected. Now remember, this was more a financial crisis versus some of the macro crisis that we had been enduring before. And that's exactly what I think. We're much closer to what happened in 2007 and 2008. So 18 months, 4.3, almost a 10% unemployment rate, which would be absolutely terrible under these conditions as we start to look at this going forward. Here, of course, was the Cerveza recession, only 2 months. Obviously, that was really not one to be looked at. And then, of course, where we are right now. So could this go 18 months if you think about it from as of today? Here we are, late July of 2022, and 18 months out, that starts to time us through 2024. A lot of things happening in 2024. You've got an election happening, and you also have a major happening within Bitcoin itself. So that could all line up to some very, very interesting times ahead for crypto investors. And that's where I think this kind of leads into a potential somewhat of a bullish look right now. Now, there are some factors in here that you have to take into consideration because we will see some dips. The question is, when will we see those dips happen? And what will they look like? There's some negative news on the back end of this. I'll show you some of that because you can't really have the rosy and the red news here with what this might mean with the dollar starting to dip. That means crypto will start to be a safe haven. Those kind of things will start to happen from a macro environment. If you look here, U.S. pending home sales, this gets back to my point of trailing impacts. U.S. pending home sales plunged 20% year over year. This is in June. Let's see how liquid the real estate market is with rates at 5.5. This would be huge, 5.5, and the median price is 35% than that of 2020. So again, higher prices, higher interest rates, and yet we're starting to see a real significant plummet in sales. When you see a slowing of sales, what happens? Inventory increases, prices retract dramatically. Now that means we have the downturn occur, and the impact on the homeowners is going to be significant depending on the timing in which you're in those single family homes. And maybe you're in the position where you have to sell something because of a job move, things like that. That would hurt tremendously right now if you were being forced to sell your house because you were moving for a job or something. That will most likely become a factor in the future is remote work, just so I don't have to sell my house. Here was top cities, just to give you an example of home buyers that are seeking to leave. This is crazy. San Francisco, LA, New York, DC, Seattle, Boston, Detroit, Denver, Chicago, and Minneapolis. This is all coming off of Redfin. Again, these are major cities in the essence that price tolerance is out of whack. We now are really in a kind of a new discovery mode of what interest rates will be. I mean, we could see 7 to 8% interest rates by the time this is all over. That would be devastating for the real estate market overall. Just a quick headline here: strong dollar is wreaking havoc globally, and it's just getting started. Just a quick one, in the sense of when you look at the dollar itself and where the dollar sets in comparison, and I'll show you the Dixie here in a minute. The key here is as we start to see a dollar soften, remember it's at its all-time high almost. The potential here for how a dollar starts to soften, especially on a global scale, that opens up the window for potential alternative assets. And alternative assets, number one would be Bitcoin. But I think there's going to be some movement here with Ethereum. Ethereum's merge coming in September. This will have a lot of play into how these markets start to play out in the next 2 quarters, which I think there's going to be some opportunity here over the next 2 quarters for sure. I do want to thank our sponsor today. That's iTrust Capital. If you guys are looking at long-term holding positions in crypto, one way to go about that is through a crypto IRA. It's very simple to do and very easy to join. In fact, you don't actually have to fund your IRA to learn about this. You can actually just go to to the iTrust Capital website Join, give them your email. They'll start feeding you information, giving you a little bit of insight. You can start asking questions, all sorts of things. This is one of those that is a trusted entity in the space, 5.5 billion in transactions, 175,000 accounts overall. Make sure and check it out. They've got a pretty cool offer right now, $100 in funding rewards when you do fund your IRA. So, and here we are on the back half of the year. So we're going to start looking at some tax positions as well. So check them out. See what you guys think about those. The Dixie, this is a good example of what Crypto Boss is saying right here. Dixie is breaking down. Good sign for crypto. My point, yes, we're under the trend line right now. The Dixie is starting to hold, and what that is the dollar chart basically to show how the strength of the dollar is holding up. Granted, it is still on a high note. Don't get me wrong. And that is a good factor, but what a lot of early investors will do is they start looking at these trends and they start looking for that next hedge. And that is why I think we're going to continue to see some movement here with crypto. Ethereum's dev confirms the go early merger date. Still, this is September. Final update before the merge is still in place. And there's some cool things happening here. The lead developer, Tim Byko, he's the guy that took to Twitter announcing the details of the testnet transition. So I think, again, this will be a full-on run for Ethereum. If Ethereum does not meet the merge date in September, this could spell problems not only for the Ethereum ecosystem, but maybe even for crypto. It's that big, especially because of the dominance scenario. We've seen Bitcoin's dominance start to slide just a little bit. I think Ethereum will continue to grow. And I still believe Ethereum is, and I know a lot of people say it's one of the biggest ecosystems, but it is still a sleeping giant. And what I mean by that, there's so much there in the way of the ecosystem, but there's so much holding it back. So it truly is a sleeping giant and what it could look like in the future. Here you've got Aja Boom saying Ethereum 1700, what's next? I think there's some opportunity here, guys, for watching what Ethereum could be doing. We'll probably do a breakdown on Ethereum. If you guys want us to do a full rundown on the updates for Ethereum leading into the merge in September, we probably should do an Ethereum watch video and keep a look out on where things are, because there's a lot of strategic things that happen with both the development cycles, the devs themselves, and just in general, the macros from a Bitcoin standpoint and what's happening from a global macro standpoint that can affect Ethereum. If you guys would love us to do that, hit the like button. It's the way we get feedback from you guys to understand. Make sure and put your questions in over on the side. I'll try to get to as many of those as we can. There's a lot of tweets to go through. Here's the daily active addresses reaching all new high. This, of course, we knew over 1.1 million addresses made ETH transactions yesterday. This is making a total of 1.6 million transactions. And again, just look at that chart. This is amazing to see the activity of what's happening within Ethereum. And I think, again, merge is coming. Lots in the way of good position. Here's Gareth's tweet. Dollar falls tells us markets believe that the Federal Reserve is almost done raising rates after today's 75. My guess is September, maybe 25, and it's done. The problem is that's a nasty recession in 2023, but obviously the Fed's going to get handcuffed to lower rates due to stubborn high inflation. I'm kind of in agreement with Gareth in the sense that, and I have kind of debated this, is toward Q4, I still feel that there's more pressure than a 0.25 coming in the next run. But then again, yesterday I was expecting a little bit harder hit. I was thinking that I might take the risk and try to get smack inflation in its mouth and try to pull it down quickly and then start to soften into the midterms. Not necessarily the case. However, CPI may be the pressure cooker that is waiting to pop. Remember, jobs, housing, and fuel costs are going to be watched very closely in this next 60-day cycle. So some pretty cool, interesting things. We wouldn't need Bitcoin if we could just trust banks, if we could trust people, if we could trust the government. Yeah, well, that's a problem. All things of those. 7 stages of the market modern. I love going through these juicy tweets. This is from Darius Dale. 1, hedge funds, lower gross, tightening net exposure. This is a good one. Systematic sells. I love it. And then mutual funds. I'm just loving that one. Mutual funds buy the dips in cheap assets, systematic chases on the gain, and then HF short now expensive assets, systematic unwinds, and then retail pukes the lows. All right, if you understand that, you're probably a macro guy and a trader. But the point is that it's just up one, down one, up one, down one, and it's kind of interesting to see how these the modern market is evolving in front of us. Not necessarily anything to laugh at, because a lot of people are taking baths right now, even though right now I think there are some opportunities. If anybody was in Bitcoin around that 20,000 mark and you were buying in, you're sitting in a good position right there. And same thing with ETH. If you were in Solana at that dip, I mean, we've seen a lot of different altcoins that have taken some pretty big moves, including Uniswap, which absolutely just went off the rails. So just in, House Democrats plan to propose a ban on stock trading for lawmakers. Yeah, okay, I'll believe this when I see it. As they say, when hell freezes over, this will happen. Senior staff, unlikely that this will be there for sure. There's just no way they're going to let that go, man. There's too much juice in the lemon to squeeze out. They're not going to let that go. No way. Experts who said inflation was transitory will now say the U.S. is not in recession. I think this is kind of a theme that everybody is understanding now, is that we can't trust our lawmakers. We can't trust our government officials because they don't really know what's going on. So I think the key here is that when you put all of these things together, not that everybody understands. I think, for the most part, the key is just looking at all the facts and figures and not being blinded by your own personal interest or your own agendas that are being supported through your PACs or other aspects that are driving your decision making, especially on Capitol Hill. I think that's why we need to see a lot more revolution. I think we're about to see it too. I think we are going to see a big move in the kind of lawmakers that are coming out in the next decade. Things are getting a little different. Very possible that cronyism may be on its way out, but that's also hopium that I'm hoping that we'll see more of that in the coming years. And I think only because there's a lot of you guys out there right now, there's probably a lawmaker out there watching us right now that just hasn't run for office, that understands crypto, understands the freedom of what blockchain is going to do from an innovation standpoint, and most likely will take that to the next level. We have a few people, even here in Miami, that are starting to enter the political sphere, and I'm getting a chance to talk to these people, and for the first time, I feel like these people actually are connected to the real, opportunity that this represents. If you look back in the early days of the internet, and some of the lawmakers that were making that happen, you'd be surprised at how many Dems and Republicans both were bipartisan around what the future of the internet could be and would be, and that's why we are where we are. Now, on the negative point, you've got El Capo saying, don't you see the prices just ranging between 19 and 23, even though we just almost clipped 24, during a downtrend and with no signs of accumulation. If you want to buy here, go ahead. Don't regret and cry, the market makes new lows, which is likely. I'm not buying. All right, so again, this is if you are trying to position for a longer hold. If you are trading, remember, we do these market movers like this, guys. One thing is we're not giving you trading advice. The idea is hopefully we're giving you research and enough insights to the macros that help you make decisions that are smart for your portfolio. So not investment advice, but hopefully get you going in the right direction. So with that, I think there are some other things that are happening in the space that we have to be aware of. You got Signature Bank, who has been betting, pretty much anybody and everybody in the crypto space has been utilizing Signature Bank as their bank for their debit card launches, all these different factors. You look at some of the things that they did just in the past little bit. Let me kind of just jump down here to a few points. I wanted to highlight, this is 2021 versus 2022. Notice Signature Bank's growth right here in terms of overall deposits versus what we've seen right here in 2022. So again, this is one that is big. Signature sparks flew again this month after a group said deposits dropped by $5 billion during the second quarter. All right, half the outflow from clients of its New York banking teams and half from digital assets. So again, big deal. Now, this is interesting because I didn't know this confidential watch list existed. So the FDIC Insurance Corporation maintains a watch list of problem institutions, and each quarter it publishes the number of total assets of problem banks, which prompted a question to Signature in its April earnings call from JP Morgan. This, of course, is interesting. Now, they did deny it. DiPaolo responded on the call that banks aren't allowed to comment about the list, but if Signature was on it, he would know, and he didn't know anything at the time. So that could be easily said at the time. So this is just one of those banks that I'm on the watch. It is on my watch list now, is Signature, and the companies that are involved with Signature. So as you start to see how a lot of these big launches occur within many of these crypto projects, Signature Bank is usually one of the big ones behind it, including, I was just looking at this the other day, including projects like Pionex, their US operations also use a Signature Bank. I'm finding more and more connections to Signature Bank. Interesting thing right here, question about the area where Signature has rapidly grown in size, loans since 2018, so-called fund lending. DiPaolo characterized it as a remarkably safe niche in a private equity industry. Signature's funds capitals call investment funds investors such as pension funds, endowments, sovereign, etc. And it's a zero-loss business. I would agree that those kinds of investment funds are somewhat of a zero-loss business, but the fact that they had so much in digital assets, this could be one of those that could be on the watch list for potential coming time. U.S. economy shrinks for second consecutive quarter. This, of course, is just reiterating there. And you also look at in comparison to things that are happening worldwide. You've got, of course, Korea Peninsula now saying that they're on the brink of war. These kind of things are the black swan events that start these domino effects. So you have to pay attention to what's happening on the global scale of things because it has a lot of factors. Look at Germany. Inflation hits 8.5. This is prices on food is jumping. They're getting ready to go into their winter months in the next few, and they're still going to be dealing with supply issues in terms of gas, which is their number one liquid gas, which is their number one way to be able to heat Germany, which is a problem because of the source being Russia. So you've got a lot of those factors playing into that. Now, over to a chart quickly. I wanted to show the total too. This is the crypto markets in general. And if you look at the crypto markets in general, on overall market cap, in reality, we are in a very position. A lot of people look at this as being, could we be at the bottom? And these, in comparison, almost all of these totals have been wiped out in terms of gains. And where we are right now at 618 billion, it looks like, this is very similar. So could this be the bottom is the question mark. Are we maybe ranging in this 20 to 23 as truly being the bottom of where Bitcoin is, and somewhere around 600 billion as the bottom in terms of the market cap? Because remember, the last big market cap bottom right here, Feb 2021, before we started seeing these moves up and down right here, was still hovering in that $600 billion range outside of this area right here, which would put us pre-run on crypto, which was December 2020, which put us back down at 200 billion in the overall market cap. So if you look at overall market caps, there are some similarities there that have some indicators that this could be nearing the bottom. Again, macros will be everything. The other macro that I look at is the Dixie. This is just showing how quickly the dollar dropped here in March of 20. We had that dip, and then a little bit of sideways action, and then this explosion right here between May of 21 and where we're setting right now. Obviously, as we get in and zoom in on this one just a little bit, let me kind of move on the numbers here. You can kind of start to see our movement down right here on the dollar. So lots happening, I think, with the aspect that if the dollar does continue on its trajectory downward, there is an opportunity right there for Bitcoin. And that means bullish times ahead. And of course, when you look at the chart, right here's Bitcoin charging in on 24K. Again, we've had some nice little moves. This is on the 4-hour right now. Nice little pump yesterday, a little bit of sideways, and then another nice little pump today. So we've seen it. Hopefully you guys were in on this movement right before the Fed, or maybe all the way back here in July 17th when you were following, maybe along with things like what we were tracking from a sentiment standpoint. So lots of stuff happening. Don't forget to get your questions in on the side. Just a quick look at sentiment. Because yesterday we put out the numbers. Bitcoin did have a positive move on sentiment from a 61.18 to almost a full point, 61.98. And AMP was up from a 56 to a 57.12. This is our own crypto power index that kind of aligns somewhat with where the markets start to trend. But in some cases, we'll get early indicators on these sentiment numbers that start kind of pointing this direction. So right now, and this was something we put out yesterday, is that we were seeing trending up. And in fact, that's obviously where we've gone over the last 12 hours, is up again. Let's take a look at the poll real quick. All right, so how long will the recession last? We've got 25% of you saying less than 6 to 12 for 38. So that seems to be the winner, and over 1 at 37. I'm a little bit more contrarian. I think we may be more in the line of about an 18-month, because remember, this is July. So all of 2023 could be a recession, and how that's responded in and out. Because remember, just a recession doesn't just stop, okay? It goes and it cycles through, and then it starts coming out. And coming out can sometimes take months. So in that kind of scenario, let's say that it lasts a year, and you go all the way to July of next year, and then we finally see no more interest rates, and we see downtrend in interest rates, and we see job numbers correcting, because I think we're going to see job numbers in pain in 2023 and later this year. And we see those job numbers correcting and interest rates going down, meaning full correction. That is on the latter half of 23. So the real release out of that recession, the official growth in GDP, and also job positions and job situations resolving, and then of course interest, I definitely think that is going to be the factor. All right, so how's the recession confirmed? Just 2 quarters of negative GDP. That's how it's, that used to be how it's confirmed. Now, who knows how it's confirmed? It depends on what White House you're talking to. Here we go, Trex. Do you think Apple earnings are going to have a negative impact for Bitcoin? Did they come in? I wonder if the Apple earnings came in. Does anybody know? We haven't been watching. I know it's late in the day today. Sometimes they'll drop them early, and we get a little bit of indicator. I don't know that it will have negative impact unless we see massive earning problems at Apple, because that is a stock market bellwether stock, and could have some factors, at least in the tech stocks themselves. But yet, I'm just not sure. What happens if, after the merge, if the SEC slaps ETH with a security lawsuit? That would be another black swan, kind of scenario. I think that itself would be just an unbelievable situation if they try to declare it. The problem is there's not an organization that they would sue. It would have to somehow be done through a way in which maybe a class action would come into play. That's a good question for John Deaton. What would happen on something like that? Zanarl, merge likely getting delayed again. Gosh, I hope not. I think that has a lot of downtrend for both Bitcoin and Ethereum if we see another merge delay. Andrew, I want to know when the housing market is going to tank. I'm thinking any day now. You're living in Seattle, and houses are still $2 million at the cheapest. Kind of the same scenario down here in South Florida is you're dealing with markets that have not caught up yet. Remember, we're going to get ready to see the new interest rates going out in the mortgages. So, refi markets are pretty much toast. So I think we're still in the range. Nature, Bitcoin 14.5 still a possibility. I do believe that we will see a sub 20. Could we see a 13 to 14 range? Both Gareth, myself, many other analysts are looking at this. I still believe we see a deep cut into Bitcoin, only because, remember, this may just be the beginning of how this correction starts. I don't believe we have hit the bottom. Can't realize grains if they're not on an exchange to get the sell into fiat. That is for sure. If we start to see a lot more pressure from the SEC on the exchanges, especially if you've been watching what's happening with Coinbase. Chimpville, again, 6-month, 12-month effect from housing. I would agree. I think it's a trailing indicator that we'll start to see as the months roll on, especially into the summer. We have Gareth coming in. Just so you guys know, we have Gareth coming on every couple of weeks to really cycle in some of the charts, take a look, deep dive on what's happening within the macro side. We do our macro Mondays with Gareth, so we'll definitely have him back on. If we see another leg down after this rally, what do you think will trigger it? I don't know. I think it could be a liquidity event, maybe, but more than likely, I think it will just be a situation where some of the market starts to realize the pressures and also, if anything, a positive CPI print, which is really only a few weeks away. If we get another positive CPI, then that kind of starts to paint the picture for the Fed in terms of the data that's going to be available. So that could be the thing. So watch for the CPI date. Check those dates. It's early August of when we'll get our next CPI print. Mt. Gox will be dumping. Also, Mt. Gox also dumping in early August. That's another one to keep track of. Do you see Bitcoin heading to a sub 19? Again, Ty here, good point. If Mt. Gox, if we start to see real dumps on the Bitcoin from Mt. Gox recovery, along with a CPI up, in other words, maybe a 9+ or a double digit, if we saw a double digit, that would do it. I think that would be enough to put a lot of pressure on Bitcoin in general. Maybe a black swan event around the corner. I guess the SEC investigation at Coinbase could get quite nasty down the road. This is going to be a hard one, I think, for the SEC because of their position of allowing Coinbase to go public. So it is one that, and also remember, the CFTC is jumping into this mix as well, very publicly, on trying to essentially fend off the SEC in terms of what is really a power grab. This is a power grab to determine the control of these kinds of assets. So something for sure to watch. XRP versus SEC verdict affecting the market for sure. When we get that, again, you've got two judges who are getting a little bit frustrated, I think, with what's been happening between XRP and Ripple, or Ripple and the SEC. So I think that could be a factor playing in this. Thoughts on any day or swing trading ETH instead of Bitcoin, or just do Bitcoin any advantages? Seems they're almost real-time tandem. I still believe that, there's some option. I got in a trade yesterday with Bitcoin, and I am, looking at swing trading right now, but again, not financial advice, but I am still looking at some altcoins. And altcoins, I still believe, are the route to take because of the potential wins here. We have our 20K portfolio videos that we did. Make sure and check them out. They're in our playlist below. And it runs down through 43 tokens. We drilled it down into 20. And we have a mix of what we're going to be investing in. I am waiting for some adjustments on some of these before an entry. But I think some of them are going to hit. Some of them may not. We may have to adjust our entry point. Crypto's locked on Celsius and Voyager exchanges are out of circulation permanently. Crypto's locked on Celsius and Voyager exchanges are out of circulation permanently. No, I don't think they will be, because at some point those assets have to be sold to basically deal with the bankruptcy courts. So they'll go back into the market at some point. The question is when, how, what price. The good thing is these are appreciating assets, so, and it is a liquid asset, so the bankruptcy court could dictate when that does based on a run. So if you get a run to 30K, that would be a really good thing for both Voyager and Celsius, at least from a bankruptcy court standpoint. Think we see a red weekend or continue to see the pump to 28? That is a really good question. If you followed Gareth on our last video that we did, our analysis, he was still looking at 28 as a possibility. 25 was the run. So I think right now we're in a little bit of a quandary because of the situation. I think we do have bullish signs still. Our sentiment numbers showing bullish. We started showing that yesterday, so the pump is still on. In my opinion, the question is how long will it last? If it hits 25, could that be the party's over and we see a correction? Again, I think there's some significant things that have to happen, but 28 is the opening. If we blast through 25, that's the one to deal with. Yes, Deaton did win his amicus brief and has the right to appear for XRP, which is kind of interesting. I was watching Jeremy Hogan, who is another attorney that breaks XRP down, and he made a really good point. He had never seen a response to a brief that named the attorney instead of the defendant or defendant's class. So for the fact that the SEC stooped to that level to actually name Deaton, I was blown away. And he was too, because he said he'd never seen that before in a federal case. So listen, crypto is causing governments, and I think in general, a lot of lawmakers, a lot of indigestion because of the pressure it is putting on the financial systems and the status quo. So remember, all of that. Things change fast when the type of evolution is occurring right now in crypto. All right, lots happening out there, guys. Make sure and jump into our Diamond Circle. It is our own newsletter and community group. It's absolutely free. In times like this is the time when you want to be involved in communities. You can also get into our mastermind. It's really easy. Click the link below. It'll take you right to our website. You can join for free. You get a couple of our newsletters each week. We do drops of information, editorial, AMAs, all kinds of stuff, along with additional videos that go over there. And of course, you also can jump into the CPI, all kinds of cool stuff. If you guys want to reach me, it is out on Twitter @Paul Barron. We'll catch you next time right here on TechPath.